Well, the dollar has dropped to an 8-month low against major currencies, but our next guest says that doesn't mean it's time to buy the euro. Joining me now is David Mann. He's the head of currency research at Standard Chartered Bank. Based on data compiled by Bloomberg, David and his team are among the most accurate currency forecasters, so that means we call him a Bloomberg best. David, thanks for coming in. Appreciate it.
Thank you very much.
So a lot of people have been watching the dollar very closely as it just continues to get hammered. Do you think we'll keep seeing that because of the expectation that the Fed is going to do more quantitative easing?
Well, it's absolutely a key factor that we're watching for, whether or not you're going to see the dollar broadly weaken. And I think the key thing here is deciding which currencies to bet for against the dollar. And against the majors, we think it is actually a more difficult situation than against, for example, emerging Asian currencies, where we see fundamentally the valuations justify further strength, compared to, for example, in Europe, where actually the euro is above fair value estimates. And also it's quite justified that we may not necessarily see the same highs as we saw, for example, last year, or the multi-year highs. Main reason for that being because there's an extra risk premium that is now deservedly so there in Europe that wasn't there even last year.
David, Alan Bruskin of Deutsche Bank was on earlier today with our Tom Keene on Bloomberg Surveillance. He said weakness in the dollar will help push the euro to as high as 140. Is that's kind of on the radar screen there?
Yeah, I don't think that's impossible. I think it's a fair bet you could see that. We just think that there are better bets out there rather than just purely going with long the euro against the dollar. Such as the Korean won, Indonesian rupiah, and Indian rupee. We think these currencies are likely to continue to appreciate, and we've been seeing walls of money coming in, increasingly amounts of allocations coming from investors in this part of the world, around the US, and also from Europe. People looking to diversify their portfolios and take advantage of the longer-term benefits that there are from investing in some of the markets that maybe they've been paying less attention to in the past.
And what's your take on what's been happening between the U.S. and China in terms of the Yuan? Is the Chinese yuan a good bet now, perhaps, because it's going to go up, whether it's because of U.S. pressure or because China lets it do it slowly?
Well, firstly, absolutely agree. It's all about what's in China's interest. They will act in their interest rather necessarily than behaving as a sort of reacting to international pressure. And we do believe it is in China's interest to continue to allow their currency to appreciate. Certainly, if they could get it, say, 20–30% stronger, there'd be less of a one-way bet mentality in the markets, and they'd be dealing with less need to sterilize a lot of the hot money coming in.
What would that mean for world currency markets if it appreciates to that level?
Well, the thing is, we're very sure that it's not going to go that fast that soon. It's going to go gradually, and we're going to see other currencies that are sort of proxy currencies for the renminbi, the Korean won, Malaysian ringgit, continue to appreciate alongside it. And what's good with this is that we're likely to see further inflows, and you're already able to, for example, get hold of renminbi offshore now that the Hong Kong market is able to make that offerable. And we're going to see more and more, we think, use of the offshore renminbi, and increasingly it'll be used as a reserve currency.
David, just quickly here in our last 30 seconds, the Japanese situation. Do you think their interventions are going to continue to be successful?
We think it's likely to be successful, but decreasingly so. Usually you get diminishing marginal returns from intervention. Each time the market is less surprised, they're more ready for it, and they're more convinced that it's really just another good opportunity. What you need to see turn dollar yen round is the fundamentals to change, and in the short term, that's going to be very difficult.
All right, David Mann, head of currency research, Standard Chartered Bank, joining us on set. Nice to meet you. Thanks for coming in.